like to introduce our next speaker, who is again joining us from behind the big pond called Atlantic Ocean. This is Mr. John Harvey from Toronto in Canada. After spending nearly 2 decades in the insurance industry, working for several home, auto, life, and health insurance companies and suppliers in various leadership, executive, and consulting roles, John dedicated to pursue his lifelong dream of being an entrepreneur. Since 2019, John has launched several of his own successful startup companies, and he has acted as an advisor, coach, and fractional executive to many Insurtech startups in Canada and abroad. Because John is also an entrepreneur, he understands and struggles of early stage company founders, and this was a major catalyst for launching Insurtech Canada, a community that is focused on helping founders get discovered and funded while advancing the cause of insurance innovation in Canada and globally. John earned his MBA as well as certification in risk management and Lean Six Sigma. He lives with his wife, Doc, and 4 children. 4 children, oh my God! Just outside Toronto, Ontario. I somehow find so many close points with our efforts here in Insurtech Balkans to develop the Insurtech scene across the Balkans. So I am really happy to meet John and to give him the floor to share some of his the challenges that he has met alongside creating Insurtech Canada. So John, the floor is yours.
Thank you so much, Dezo. I really appreciate the intro, and it's really great to be with you. Thanks for having me today. I really found the last speaker fascinating, actually. That was really interesting stuff, kind of hard to follow. So I'll try to make Insurtech Canada as interesting as possible. I may need to have my head examined for a psychological disorder after having 4 kids. So I saw the reaction there. I'm going to share my screen now. And I'm going to take you guys through just an overview of the Canadian Insurtech landscape. I have to give credit to Luge Capital, who recently published a Insurtech overview of Canada. They do this on an annual basis, and it's a very comprehensive view of the insurance landscape and Insurtech in particular. And of course, there's other sources as well. As my own independent research. And just excuse me, I am fighting a cold, so I'll do my best to not drop out here as we get going. So in the intro, it was mentioned that a bit about my background, so I won't bore you. 2 decades in the insurance industry is a long time, but I'm really glad to be focused on the entrepreneurial side of insurance. And yes, it is possible to be an entrepreneur while being in the insurance industry. And I love nothing more than working with Insurtech startups, founder-led companies who are in the early stages, trying to get their product to market and trying to disrupt an industry that needs innovation and disruption desperately. And I believe that's a cycle that happens and is necessary. So it was mentioned as well that a big part of our focus here at Insurtech Canada is on founders and helping founders get discovered, helping founders get launched and get funded. And you're going to see that theme probably come up throughout my talk here today, because I believe that a focus on founders is important. And I'm going to emphasize this point. The reason why it's so important is because I believe founders are closest to the client. We have a lot of people kind of tripping over themselves and stumbling over themselves, trying to meet carrier needs and trying to innovate for the sake of carrier profitability or making carrier bottom lines bigger, which is important, right? We need a healthy insurance industry, no doubt. I don't argue against that, but at the end of the day, if the insurance industry is going to remain relevant, especially to the next generation, it's going to have to innovate at a much faster pace than it currently is. And it's one of the last industries, and you look at the fintech space, Insurtech is one of the last industries to innovate in a lot of legacy systems and processes and habits and regulatory constraints that are used as excuses to not innovate. And I believe if we don't focus on the end user and using founders as a channel to the end user, there's going to be more major disruption to the industry through non-traditional players like Amazon, like Google, like Tesla, like we're seeing today. So that's a big part of our focus here, and I'll just get right into it. So as far as the trends are concerned in Canada, I'll take you through some numbers here. As an industry, the insurance industry really started writing its first policies in the early 19th century. Canada is a fairly young country, as you all know. It's growing at about a 6% rate year over year. We're seeing a big shift towards companies moving away from on-premises based siloed management systems and underwriting policy distribution systems to cloud-based. And that's a trend, obviously, that's happening globally. I think the first wave of it happened with larger carriers in Canada, some of the publicly traded stock companies, as they're called. And we're seeing that trend now accelerate with some of the smaller carriers. These are multi-year projects. And the reason why I mention them, why they're important, is not because that should be news to you, but it is a key foundational and fundamental step in the evolution process for Insurtech to really take hold and be transformational in nature, because a lot of this innovation is happening outside of insurance. People who are not traditionally from insurance, inventors, computer scientists, engineering types, et cetera, and they create these great technology solutions, but they can't integrate with legacy insurance systems. So it's very important, and it's actually critical that the insurance industry continues to accelerate that pace of innovation and the transformation of their legacy systems and moving towards these more modernized systems, which ultimately will give them more efficiency and the ability to connect to IoT devices, have a more connected product that's directly connected to the end user. From an economic standpoint, the insurance industry is one of the largest employers in Canada, creates or employs about 840,000 people. And, we're a population of just under 40 million. So it's one of the largest industries, contributing 131 billion to the gross domestic product, or GDP. From a startup standpoint, we need more Insurtech startups, but there's about 160 that are, I don't want to say worth mentioning, but that are kind of on the radar. I think there's a lot. I believe that's the tip of the iceberg. I think there's a lot more underneath, but 160 that are on the radar, that are being tracked. And as far as funding is concerned, in the last 10 years, there's been about 1.2 billion that has been raised in private equity or venture capital to fund these early stage startups, pre-Series A and post-Series A, and some of them into IPO. From a distribution standpoint, it is a mixed market. Brokers continue to distribute the majority of commercial insurance in Canada on the P&C side. Personal is kind of a split between direct channels and brokers, and the digital channel is growing at a rapid pace at about 129% year over year, and we'll continue to see that growth in digital channels. And that has actually created some, a bit of a threat for brokers, and I think a good one. And I think all of this disruptive behavior is a good thing for people who may become complacent. I certainly am very bullish on brokers, and I'm personally a big fan of brokers. But I believe technology will just further enable brokers and empower them to create a competitive advantage for themselves. And the brokers that are innovating in the space are using digital tools to compete with direct writers. So that's kind of the 50,000 foot view of the Canadian landscape. I'll get into the insurance environment now. We have an interesting market. Canada, as I mentioned, is a young country. We're fairly small compared to our neighbors to the south. Being the closest trading partner of the U.S. has its benefits. So there's pros and cons. So there's also some downside to that. But relatively speaking, we're a tenth of their size. California alone has more people than Canada. So we always kind of keep that in the rearview mirror and recognize that there's benefits there, but it can create some threats, which I'll talk about a little bit later. As far as the mix of the market, when you look at the P&C side, which is predominantly home and auto, we're an interesting mix of US-based insurers, UK-based, and Canadian insurers. So we have players like Travelers, who is big in the US and Allstate. We had State Farm; they were acquired by Desjardins. Two large carriers, RSA and Aviva. RSA was recently acquired by Intact Insurance, which is a Canadian-based insurance and publicly traded insurer, the largest property and casualty insurer in Canada. But we do have this interesting mix of US and UK-based insurers. And the reason I mention that is that does have an influence on how decisions get made. All the strategic decisions that influence Canada are not always made domestically. So that's an interesting dynamic that takes place. And we get some of the best of both worlds. And there's also, I think, that creates some lag as far as innovation is concerned. And it creates an opportunity for the Canadian-based insurers who can really go deep and really understand the Canadian public. Not to say that these other insurers that are UK-based and US-based, they've been in Canada for a long time. They certainly understand the Canadian mindset, but it does create an interesting dynamic. And then we do have other foreign entities that are operating in Canada as well. On the life and health side, tends to be larger, major life and health carriers. The top 5 control 82% of the market. That's quite consolidated. When you have 5 players controlling that much of the market, there's 150 providers in total distributing or selling life and health, underwriting life and health insurance products in Canada. But 82% of that is controlled by the top 5 companies like Sun Life, Manulife, Industrial Alliance, et cetera, that you've probably heard of, Desjardins. On the property and casualty side, it's also very consolidated, with the top 10 controlling 63% of the market, with very thin profit margins, 3.6% return on investment. The reason I mention consolidation is not to bore you, because these are just a bunch of stats, and I could really lose the audience quick here. The reason that I mentioned the consolidation piece is Canada tends to be very monopolistic in nature and the way that we're structured. I'll use our banking industry as an example. The banking industry is predominantly controlled by 5 banks in Canada. So I've always said that the insurance industry, I believe that the banking industry is a mirror of what the insurance industry will look like in the next 10 to 15 years, with fewer companies controlling more of the market share. Again, if you are a tech company trying to innovate in insurance, and the market, there's a stronghold in the market by a bunch of traditional or a small number of traditional players, they could really, stifle innovation and keep innovators out and create some significant barriers to entry. And I think we need to be aware of that, because we already operate in a highly regulated industry that often uses that as a cop-out, as a fallback, and an excuse to not innovate. And I think carriers also need to be aware of that dynamic that exists, which I'm sure they are. We don't have enough venture funds in Canada. There are, and when I say venture funds, I mean carrier-led venture funds. I'll talk about a little bit about the capital markets or the venture capital, private equity later. But as far as insurance companies getting into the game, Intact Ventures Cooperators has a ventures arm. But insurers need to have, I think, more skin in the game when it comes to providing capital to fund this innovation, because I think it's inevitable. It's not going to come from within, and I think most carriers know that the innovation has to come from outside for the industry to advance at the pace that it needs to. Interestingly enough, on the topic of innovation, as I mentioned before, in addition to the consolidation, 3 provinces are public insurance provinces. So that means they're government-run auto insurance. Again, personally, I'm not a big fan of having too many government institutions calling the shots, because I think it just slows down innovation. But the government does play a key role in being a catalyst for that. And we do have quite a rich funding environment, which I'll talk a little bit about later, with our tax credits and grants that are available to tech startup companies in Canada. Finally, our growth rate, our CAGR is around 4.7% on a year-over-year basis. I'll get into the verticals and kind of talk a little bit about the trends in each of those verticals. And I think these slides, I'm going to go back here. Here we go. I just jumped forward a little bit too much. So on the auto side, I don't think this is going to be any different than what you guys are used to seeing in your home markets. You've got auto, property, liability, life, and health. Those are the major, pillars or verticals within our insurance market, and I'm sure it's no different in yours. Auto, $27 billion in written premium on an annual basis. So auto is definitely dominant. We're seeing a big trend towards usage-based insurance. Should be no surprise. A lot of insurance companies are distributing connected apps on the personal lines to try to provide in exchange for discounts. There's, again, pros and cons in that area. A lot of the driver measurement that is done and captured through a cell phone has questionable accuracy and is full of false positives. So I think the industry is working through that. There's pressure to offer something to the public, and whether that should be offered through an app-based solution or through a hardware device combined with some AI and a SaaS product, I think is still being examined. Certainly on the commercial side of things, the connected hardware solutions in vehicles is more common and is quite fragmented right now. If I can say, a lot of commercial applications like short haul delivery, taxi fleets, even long haul trucking, it's not uncommon to have multiple devices monitoring multiple things within the passenger cabin, and through webcams or dash cams and GPS, and then traditional telematics dongle devices that plug into the OBD2 port. I think there's going to be a move away from that fragmented nature long term, and consolidating that into one connected device that provides more than just a measurement tool, but something as a baseline using artificial intelligence. A company that I'm very close to, Foresight Analytics, actually uses artificial intelligence and self-driving models. Really interesting concept to measure driver behavior and benchmark human driving against an autonomous vehicle model. So a lot of systems like that are coming out to be and being used to better price, select and deselect risk in the commercial markets. I already mentioned digital is experiencing a major growth trend. One thing worth mentioning on the auto side, I'm just going to flip back here. I'm jumping a little bit, but 60% of claims today are processed through some sort of streamlined automation. So we're seeing a lot of straight-through processing, which is creating efficiencies for carriers in the P&C side. And on the property side, the personal property, the connected home obviously is a big trend. I think that's a global trend with more and more connected devices in the home. Those are now being used as underwriting tools and claims adjudication tools. No surprise there. So that's creating a lot of opportunities in the space as well. And especially with short-term rentals, I think the connected home, the smart home will probably help accelerate that trend. Although we are experiencing some regulatory intervention around the short-term rentals in Canada, with there being a housing crisis. So that will work itself out long-term. On the liability side of things, $7.3 billion in written premium annually, and a lot of focus around distributing through digital channels products to small businesses, which make up a large portion of our economy. And brokers are starting to embrace more and more tools now as I had mentioned before, to innovate in their line of business. Our life market, there's over 5 trillion of written policies owned by roughly 22 million Canadians. Annually, over 23 billion in premiums are written. And the majority of that is purchased by individuals. Only 19% of that is purchased through group policies. What's interesting is on the health side, more like disability, critical illness, probably things like dental, medical, etc., are mostly purchased through group policies or employer-based than the property and casualty providers as far as their legacy systems are concerned. So that is slowing the pace of innovation in the life and health space slightly. But yeah, I believe that will pick up. We're seeing a big trend around wellness in the health space through wearable devices. People can put on their bodies or their clothing to monitor things like their heart rate and their physical fitness and habits, and use those to reduce insurance premiums. I think we'll see more of those long term, and that'll work its way into underwriting and potentially claims. Who knows? And there is a big trend towards the gig economy, especially post-COVID. And I hope that's the only time, by the way, I talk about COVID, because I don't want to talk about that. I think there's great things to talk about that are happening here, and without focusing on that subject. And the point there is that the gig economy is growing. There's more and more people that are doing side work and subcontracting and freelancing, and that's creating an opportunity, I think, for the insurance industry to be more customized in how they offer those products to people who are working in the gig economy. I'll keep going on, keep flipping along here. Give you a kind of a 50,000 foot view again at the Insurtech space. So this is where it gets interesting. As far as the environment's quite dynamic, as you can see by this map here, which is put together complements of the Digital Insurer, also known as TDI. They have an Insurtech directory that they publish on their website. They're a partner of Insurtech Canada, and you'll see that they publish something similar to this for other markets across the globe, and it's quite helpful to kind of get a snapshot view of what's happening in each of the markets. So you can see here, there's quite a bit happening around value chain innovation, and support services are growing by the I shouldn't say by the day, but by the year. I think there's an acute need for, and I know there's an acute need for more around supporting early stage startups. But I'll save that for a little bit later. As far as digital distribution is concerned, I didn't mention earlier, but there's a lot of activity in the MGA space, or managing general agents, and you're seeing a lot more companies like Apollo Insurance popping up, providing those digital tools and targeting small businesses, also offering white label solutions for brokers who want to get deeper in the digital space. Companies like Pi and Optimity, as I had mentioned, in health and wellness, they've actually been featured on the Insurtech podcast, getting into the wearables, and I see that trend really taking off in Canada. So you can see, a lot of these companies have gone through multiple stages of fundraising. Some of them will be IPO companies, no doubt. And some have already been acquired. So, we're seeing a lot of M&A activity, and you see large software consolidators acquiring some of these startups, as well as carriers going deeper into the space. And I think that activity will obviously continue, and I hope that encourages more innovation in the Canadian landscape. Just rounding third base here, I think it's important that we talk about the environment for funding, because the Insurtech space typically, as I had mentioned before, these are non-insurance people coming in, inventors, creators that have created some sort of solution for the industry to help innovate and solve a problem that in most cases, they're solving a problem that they didn't even know there was a use case for insurance. They're solving a problem that was probably more personal to them. And these companies come in and oftentimes are experiencing, severe cash burn. They need capital to deploy inventory or to hire resources and to scale and get their products to market. And one of the challenges in Canada is that there's a very conservative nature when it comes to investment. So there's a lot of risk aversion in Canada, and as a result, there's a shortage of seed funding, and that's a big problem because before a company can get to Series A and is big enough to take on, a $5 million check in a Series A fundraise, they have to do a whole bunch of other things at the early stages. And getting those smaller rounds of seed funding is critical for the survival and the longevity of these insurtech startups. And what ends up happening, I was going to save it for later, but I'll talk about it now just to be cognizant of time, is that we do experience a bit of a brain drain where a lot of these companies exit Canada and they go south to the United States where they can raise those early stage funds. And there's a much more aggressive investment environment where they can survive and thrive and grow their companies. So I believe that's something that the industry needs to take a very close look at. Carriers, this is another reason why I mentioned earlier, I think carriers need to get into the game of venture funding themselves. The government does a fairly good job of providing tax credits and grants and subsidies. We have a number of programs that are very popular in Canada. SHRED is one of them, SREND or IRAP. And I won't go through the acronyms, but basically these are tax credits for technology-based companies that are creating something unique, something new. But again, that doesn't always solve the problem of the cash crunch. So, for those out there who are looking to invest in new markets, Canada welcomes you. If you want to invest in some really cool early stage companies, we are in need of people that see the opportunity. And I'm a big believer and proponent of, funding things domestically and then growing globally. I think you should really intimately understand your domestic market and get things right and understand the core before you expand out. And so, that's something that I think we're going to have to wrestle with in Canada and figure out as we go down this innovation path. Finally, I had already mentioned, our neighbors to the south, our best friends in the U.S. So, not to sound negative, because I think a lot of great companies that start in Canada do very well in the U.S. And as a fellow founder, I also expanded my companies into the U.S. As well. But I think we just need to strike that balance between getting lost in the largest economy in the world and innovating more from within. And I'm sure everybody on the line can relate to that, being in smaller markets, that you need to create that environment where carriers are engaged, the government's playing their part. There's, I believe, deregulation, less regulation in the industry is a better thing, and that there's a healthy amount of venture capital, angel, and seed investing that's happening, all working in harmony together to help the industry evolve and innovate. So, long term, I don't have a crystal ball, but I think some of the trends that we're going to continue to see is a lot of acceleration in the connected insurance space. There's going to be more connected devices in life and health, in home and auto. Some markets like Italy, for example, is quite far down the trajectory in the connected auto space. I think we have some catching up to do there. Embedded insurance is becoming more and more common, and I think we're going to see a lot. One example of embedded insurance, mortgage providers that are offering insurance solutions that are bundled in with the mortgage. And, we could even see that same sort of activity, with what we're seeing with companies like Tesla offering an all-in-one solution. They're kind of, trying to be the iPhone or the Apple of the automotive world. I could see more OEMs or dealers getting into that space of embedded insurance that's offered on the showroom floor. And I think that's a good threat for carriers to wrestle with. And then finally, I would say just around the broker distribution channel. I had mentioned earlier that I'm very bullish on brokers, and I don't think brokers and technology have to be opposed. I think they can actually work together in harmony quite nicely. And I think we'll see more and more brokers embracing technology to empower them and to help them segment their clients, be more meaningful to their clients, and offer solutions that are customized to those more specialty risks. And with that, I will close off and thank everybody for letting me talk for 30 minutes. And I'll hand it back to the moderator. Thanks for having me today.
Thank you very much, John. This was very, very instructive presentation. And I must admit that many of the challenges that you are mentioning actually are pretty similar here at the Balkans. I cannot agree more with your statement that insurance carriers should be more involved in investments and venture capital, especially in the Insurtech industry, because this is the only way to create sort of pipeline where Insurtech companies can be created, can be developed, and later on find their place under the sun, being part of an insurance company or some player in the same field, some other player, for example, broker company, and so on and so forth. I have one or two questions to you. The first one is about seed investment. The first couple of K, maybe 20, 30K, that are so important in order to start kicking the can down the road. How and Insurtech enthusiasts could find that amount in Canada? Because, for example, in our hub, we have deployed a crowdfunding platform which was developed by a Canadian company. So we have a very close connection in a way, but crowdfunding obviously is not the way to push it forward. And for the moment, we are struggling to find the right way to launch people with ideas to just at least to show what they have in mind. How do you think is the things going on in Canada in that way?
Yeah, it's a great question. And you know what? I've had quite a bit of experience in this area. And to be honest with you, it's through a lot of trial and error before you find what works for you. I think there's a tendency for founders to go after institutional capital first. So to go after the more traditional venture capital firms or lending institutions. And I think we need to pause and move away from that. The crowdfunding thing is interesting that you mentioned, but I think where we've seen more success, and I think where we'll see more activity, is really around this space of angel investors. And the challenge with angel investors is they're not institutional in nature, so they're often hard to find. And if you don't necessarily know that they're out there. So I think it requires a lot of actual old-fashioned, lead generation, networking, connecting with different people, influencers, and connectors in the industry to find that angel capital. But in a more formalized way, there are things, at least in our environment, I'm sure it exists something similar in your environment, where you can use things like special purpose vehicles, SPVs, to formulate, a fund where, you have a fund of angels that can come together, where you have smaller investors that might be willing to invest a few thousand as individuals here and there, but you put it together in an SPV, and you have something substantial that is meaningful to a company that needs that first 50K, 100K, or 500K, which is really the hard funds to get. So I would say focus less on the traditional lenders and traditional venture capital or institutionalized, and more around that angel space and connecting with more of those, and then working to organize that through things like SPVs.
Yeah, I understand. I fully understand you. And my second question goes like this: you mentioned that you have a brain drain in Canada. In which direction goes those brains?
South, to our friends in the U.S. That was the eagle. So yeah, our brothers and sisters in the U.S. It's funny. It's not just in the Insurtech space. You see a lot of Canadian actors, comedians, musicians, all running to the U.S. And we actually have quite a thriving entertainment industry in Canada. But again, it's dominated and dwarfed by the 800-pound gorilla to the south of us. So yeah, it is mostly to the south.
Yeah, I understand. Unfortunately, we are facing the same challenge from time to time here, but in general, this is the same situation.
But this is why we have to focus on, because this is why I really appreciated your invite to speak, because Canada might look big on the global stage, but we're relatively small. And so, we have a lot of the same struggles and challenges, and we have to focus on innovating from within. But I'm a big proponent of learning from other markets and what other markets are doing well. And the US is very good, actually. They're not as consolidated as Canada, and they're very regionalized. So I've learned a lot, actually, by working closely with some of the smaller communities in the US that are doing Insurtech more on a local basis. Like Columbus, Ohio is a really great example of that. But also connecting with other Insurtech communities globally, like the folks in Israel are doing a fantastic job, Germany, etc. So I think there's a lot to learn by connecting with other communities.
Okay, John, that was my last question to you. Thank you again very much for joining our event, and hopefully we'll have a lot to do together in the future.
Thank you. It was a pleasure. Thank you for having me. Peace, everybody.